me, I should cross Third Milan Bridge for you. If you supply more than what the market needs, you will suffer. I went to a hotel in an estate in Ikoyi. I went on a Tuesday. I saw that it was fully booked. And I asked the guys there, how is it fully booked? Why are the people booking the apartment? Guess what? It's people in the estate that have houses in the estate
that are booking the rooms.
So the point is that the market is largely driven by the local demand.
We saw the market did 261 billion. There are more listings in 2025 than in 2024. What's actually driving the demand in the Shortlet market?
Top 10 countries where you have highest tourism. Nigeria is not even on top 10.
Do you mean in Africa?
Egypt. In Africa. So if we're not on top 10 of the most visited African countries globally, we are joking.
We saw the revenue for Surulere decline from 9 billion to 6 billion, and that was the biggest decline, right, in all of these markets.
As far as I'm concerned, Surulere and Yaba have the same accessibility to the island. See the same thing that's happening in Lekki. If you supply more than what the market needs, you will suffer. Because if you look at it, every market has crashed. The people that knew what they were doing, they were not affected. I was speaking to an investor, and the man said, me, I should cross Third Milan Bridge for you. Like, he made me. So, okay, before we end this conversation, right, I'd like to ask a question. So, buy, hold, sell across all the submarket estates. What location are you buying? What location are you selling? And what location are you holding?
This is the Edala Market Intelligence Podcast. No noise, just real conversations about how the real estate market actually works. So today we are going to be taking a deep dive into the Lagos Shortlet market, and I have here with me Dayo Oloyede, who is the CEO of Edala Development. So I'm just going to go right into it. Dayo, is the Lagos Shortlet market actually slowing down, or what can we see happening?
I wouldn't say the market is slowing down generally. I would say it's a different reality for different sub-markets. So if you look at somewhere like Lekki Phase 1, we saw the revenue move from about 93 billion to about 94 billion. Very low or very slow increase in the general revenue that was generated in that market, right? And that can be as a result of maybe oversaturation, a lot of supply. You have somewhere like Yaba with just about 150 listings in the market. And you have Lekki Phase 1 with about 1,000 listings, right? So it's only a matter of time. It's obvious that the market is very, very saturated in terms of, because the supply of that market or sub-market is quite limited, right? How many people actually need places to stay, right, for Shortlet in that location, right? Obviously, the island is where people want to get to, especially Lekki Phase 1, because it's a mix of the affordable and the premium. It's not the ultra luxury like Ikoyi, Banana, VR, and all of those things, right? Now, it's now a different reality when it comes to somewhere like Yaba. I would say somewhere like Yaba is currently trying to pick up. 2 years ago, we saw revenue of about, say, 2 billion. Last year, we saw revenue of about, say, 4 billion, right? That's 100% increase in the revenue, right? That market really saw a very good year, right? So for that market, I would say that for Yaba, a lot of places on the mainland, mainland was not, a lot of attention were not paid to the mainland before, right? So island was where the Shortlets market was really, right? And a lot of people moved into the island. You know, in investment generally, there's usually a market rush, right? Everybody wants to go to where it's happening, right? However, the people that look at a particular market and say this is currently undervalued, how can I dominate and take advantage of this current limited supply in this market? I think that's what happened in places like Surulere, Yaba, Bagada, Maryland. It has its own market, right? The market, I would say, is a market where you have an affordable demand. A lot of people cannot afford to. A lot of people that book and dominate the demand for mainland, Surulere, Yaba, Bagada, can't afford to stay in somewhere like maybe Ikoyi, Banana Island for Shortlets, right? So it's an aspirational market. It's an affordable market, a market that thrives on volume, right? And that was why we saw the kind of growth that we saw, right? So the question would now be to investors generally: how do you know the market has reached its peak valuation in terms of the value that can be generated from that market in terms of Shortlet value? And how do you know the market that's is still currently undervalued? Not a lot of players are there. How can you get there first of all? Dominate the market, enjoy your value from the market before it becomes saturated.
Okay, so I would like to actually reference the data, right? A lot of people are saying the market is slowing down, right? There were a lot of sentiment around the Shortlet market, especially in December. We hear people saying there were a lot of online campaigns. I don't know if it's sponsored, but people are saying the Shortlet market the Shortlets themselves are overpriced. And people are saying things like, I think I prefer to take the traditional hotels. But one thing I like us to point to is the data, right? So what does the data say? This is the second year in a row that we are tracking the Shortlet market at Edala. And for the first time we tracked the market in 2024, we saw the market did 261 billion thereabouts in revenue for the entire 2024. Our current, data for 2025, points at 280 billion, right? Which means the Shortlet market actually, made more revenue, right, in 2025 as opposed to 2024. And when we put them side by side, the big question is that premium qualifiable for that market? And I will tell you why I am trying to drive on this point. So I took a closer look at the listings that we tracked in 2024 and the listings that we tracked in 2025. In 2024, Lekki Phase 2, which currently has the most, listings for Shortlet in the whole of Lagos or in the whole of Nigeria in terms of a particular geographical location. In 2024, we tracked about 1,900 listings. In 2025, we tracked 2,100 listings, which means in Lekki Phase 2 alone, we are seeing, an increase in the number of listings. Now, when we now look at all of the markets combined, there are more listings in 2025 than in 2024. And when we were looking at the data in 2024, we sort of projected that 2025 will hit 300 billion and it will mark a landmark period for the Shortlet market in Lagos in 2025. But along the line, we fell short of that revenue by 20 billion in the market. So now the question that's on my mind is, what is actually driving the demand? If the 2025 report or data is pointing to the fact that there are more listings, right? And when we try to aggregate the listings and the revenue, everybody per time, it didn't make as much as they made in 2024, right? So is there an oversupply happening in the market? And if there's an oversupply happening in the market, which may be causing the slowing down that the individual operators are experiencing, what are the major demand drivers for Shortlet? For what everybody see online, we look at the market and what we see online, or what the people that we think take Shortlets are people that take it for leisure purposes. Those are the people that post that they use Shortlet online. But are they actually the daily drivers? I'll give an example. We run Shortlets, right? When we take bookings for Shortlet, people that usually post that they're in Shortlets are people that maybe do get together, people that have friends around, people that do stuff. But the people that book for 2 weeks, people that book for a month, they rarely, make a video or make a post about it. So what's actually driving the demand in the Shortlet market?
So in terms of the demand drivers, from my research, I've seen that is about 65% or 70% of the demand that comes from the local demand, right? Which is Nigerians in Nigeria, me and you, and all of that, right? And about 35% or 30% is really what is coming from the foreign demand. So which is Nigerians in diaspora, people that want to come and explore Nigeria or Africa generally, right? And I'll give an example. I like to go to different hotels to just meet people, understand what is going on, understand the kind of people that come into that hotel or that kind of hospitality business, right? And I went to a hotel in an estate in Ikoyi. They have about 4-star, 3-star hotels. Let me say 3-star hotels. And the supply of those hotels is around 30 units, right? I went there on a Tuesday. I've gone there. I keep going there a couple of times to just see what is happening. I've booked there a couple of times. And I went there on a Tuesday. And I saw that it was fully booked. And I asked the guys there, the receptionist and the manager, how is it fully booked on a Tuesday? Who are the people booking the apartment? Guess what? It's people in the estates that have houses in the estates
that are booking
the rooms, right?
In the hotel.
In the hotel, right? So the point is that the market is largely driven by the local demand. If you also look at it, the 30%, which also justifies it, just last week, I went to one restaurant. I don't know if you have also noticed it. Most times when you go to most restaurants on the island, maybe in Ikoyi, Lekki Phase 1, VI, you see a lot of the IJJBs. They don't come during that December again. Some of them, they come during off-peak periods just to experience.
And because it's also cheaper.
It's also cheaper.
The flights are cheaper.
Yes.
Accommodation is also cheaper. You can get very good deals. Right.
Yeah. So for me, the point is just really around the fact that our market is a market that thrives on the local demand, right? And that's why you see that when you looked at the revenue, it didn't really move so big, right? The impact was not that high because what makes up for the big market is the Lekki Ikoyi VI market. And this market have gotten to a level where, like I said in the beginning, they have gotten to a level where they cannot be so much growth in terms of how the value or the revenue jumps from, say, 90 billion to 180 billion. It has gotten to almost that peak market, right? So the market are not getting the buzz right now because Nigerian market is a market that thrives. I would give you an analogy. If you look at places like China, right, or the biggest hotel chains in the world, maybe on the top 10 list, you have Chinese brands making up for, say, 80% of that list. Why? Because most of the locations where they play in, do you know that Radisson is owned by a Chinese brand called Jingjiang? The Radisson Blue Chain.
The Radisson Blue Chain.
Yes.
It's my first time. I actually thought Radisson was owned by an American.
Yeah, it's only Mario that's owned by an American brand. I know. So for me, right, that insight just gives me a perspective to really deep dive into the Nigerian or Lagos real estate market for Shortlet or hospitality. And that makes me realize that, especially on the mainland is an affordable market. It's an aspirational market. It's a market for people, for the middle income people, right? So
who forms majority of
the
and
patronage.
They also want to experience.
So they want to experience. They want to have a feel of what it takes to book an apartment on the island, right? Or the premium or ultra luxury market. But they want it affordable, and obviously, the location is what can give you that affordability because the cost of land is cheaper, right? So for me, right, in terms of this rally or in terms of this market demand, right, the bulk of this demand, right, which is going to make up for the growth we are going to be seeing, if there's also going to be a major growth at all, is the mainland market, which is the affordable market, right? Yes, the island market can just keep increasing, maybe 10%, 20%. But if you are looking for a market that will do double, I would say double is the maximum any market can do, any submarket can do. Because also the mainland is also capped, right? The market for Surulere is different from the market for Ikeja. The market for Ikeja is different from the market for Yaba, right? So the Ikeja people, you have a lot of maybe the stopover clientele, people who want to be close to the airport. The mainland Surulere Yaba market is a market where people that want to be close to the island but can't afford the island. Maybe you are coming to Nigeria, you have an affordable budget and you want to stay in a Shortlet that is close to where the main demand is happening in the city, right? So it's a different dynamic, right? But I would say that the market is largely driven by the local demand. Also, if you look at even the 30%, because I don't think we're there in terms of attracting the big
hospitality
players, right? If you look at the top 10 countries where you have highest tourism, right? Nigeria is not even up top 10, right? You have places like South Africa, Tanzania, Morocco.
Do you mean in Africa?
Egypt. In Africa.
So Nigeria is not top 10.
Nigeria is not up to the top 10.
Not top 10. Top 10 is not top 10. Destinations that people want to explore.
So when we say,
I mean, from Europe, people. I think I would say people would visit, the like of Kenya, Rwanda, South Africa for tourism, Morocco, Egypt for tourism. I think, than Nigeria.
Yeah, because also when you also look at let's be real with ourselves. I'm not trying to set a bad, because if you really want to make money in the Nigerian market, you need to understand what we don't have and what we need to have to be able to get the value we're looking for, right? I think we have a long way to go. If you want to get that, say, revenue of the total Shortlet market in Lagos from, say, 280 billion to about, say, 400, we need to go from that total supply, moving from 30% to about 60, 70, 80%, because even the foreign market that can pay good money. So if we're not on top 10 of the most visited African countries globally, it means we are joking, right? So
I think I get your perspective, right? I get your perspective on on the fact that, I mean, what's there to experience in Nigeria? If you want to be honest with ourselves, what's there to experience in Nigeria?
There's no experience. If you go to somewhere like maybe Egypt, you have the safari. It's not that we don't have this experience. I think our problem is we have a problem creating the experience. I would give you an example. When this guy, Speed, came to Nigeria, I was not proud of the experience it was showing, right? But it was not interesting to see the Nigerian side of things, right? But when the guy went to other places like Benin, it was more cultural.
Immersive, more
It was,
immersive,
so why should a foreigner come to Nigeria? So if we don't fix that, we can't grow that.
So I think majorly it is because the hospitality ecosystem revolves around Lagos, and that might be a very big hindrance to the reception of people whenever they come to Nigeria. When you come to Nigeria, you want to be in Lagos, but what cultural perspectives can you get in Lagos? You can't get an experience like the Obudu experience in Lagos. It's impossible. You can't get, an experience like there's no waterfall in Lagos. The only thing that Lagos has is the beach. And then after the beach, there's nothing spectacular. The nightlife is there, every other thing is there, but all of those things can be replicated in any place. But certain cultural experiences or certain historical experiences, are not in Lagos. Even your festival that we do is just seasonal. And I mean, I feel like which brings me to my next point of conversation, right? When you talked about the demand drivers, you also mentioned that the island market, which right now accounts for a large chunk of what we do in the Shortlet market is already nearing its peak performance. And you mentioned that we see places like Yaba doubling revenue over a year. And I want to point to the data. Now, let's bring us back to the data. Right. If the mainland market is actually growing, right, the data we tracked last year, showed something that I see as significant in the Surulere market, and which is, skewed away from the general market data, right? And the point is, we saw the revenue for Surulere decline from 9 billion to 6 billion, and that was the biggest decline, right, in all of the submarkets that we tracked. So what do you think is happening to the revenue in Surulere? Is it that is it driven by lower quality in what is being offered to the market, or are people just not interested in Surulere? I'd like to understand.
Okay. So I would give my perspective, and it's a very practical perspective. For me, every strategic business person knows that markets would move in the direction of what you offer to it. I would say about 2-3 years ago, there was really no Shortlet markets on the mainland, right? And when it started, Surulere saw the first wave of Shortlet. In terms of even in hospitality, you can tell from the number of clubs you have on Adenini or Gusonya, you have on Ogulano Drive. You can't find that level of hospitality and activities happening in any other location. Be it Bagada, aside the Keja, be it Bagada, be it Yaba, you don't have that, concentration of hospitality driven or enablers in any other submarket on the mainland, right? Now, this is my own philosophy, or this is my own perspective. I think that what happened to the Surulere market is generally around the fact that Surulere saw the first move for Shortlets, right? So it means that everybody started doing Shortlet in Surulere. Now, when people started realizing that there are other locations, right, that you can also buy land, do development, or buy apartments in, right? Call it the Yaba, Bagada, Anthony, Maryland. Which other area is a very good Ilukbeju? Yeah, exactly. Ilukbeju. Now, what happened was that because you now add that supply, other locations that also add the same level of accessibility. As far as I'm concerned, Surulere and Yaba have the same accessibility to the island, right? Surulere, Yaba, Bagada.
Yes.
They have the same accessibility. So if I want somewhere that's close to VI, if I see something in Surulere that is not good enough, I would check Yaba. If it's better in terms of experience, product offerings, I'll go to Yaba. So what happened was Surulere saw the first mover. However, other locations that started moving, right, had better products, right, and took market share from Surulere. And that also made Surulere decline in terms of the general revenue that it did in the market. So I think that's my own philosophy around what happened in Surulere.
Okay. So particularly, I would like to throw in, a different perspective. When we look at, what's possible in a location, first off, we look at the geographical area. On the mainland, I believe that Yaba has the smallest geographical area, right, of every submarket, right? I mean, if you look at it critically, the length of Abat Macaulay is the entire Yaba, right? And and that's why, first off, we won't have as much enablers. So which means Yaba in its own sense is is a small geographical market. And for a market that is underplayed, it can quickly, double like that. And Surulere is a much bigger market, different philosophy. There's more commercial activities in Yaba than Surulere in terms of the businesses, right? Surulere is more hospitality driven, right? So what you're saying now is, we need to tell the story of Surulere better, and we need to, push products that people actually want to the market. Is that what you're saying?
So let me put it this way. The mainland has an identical market need and a market supply. Let me say the mainland has a market demand of say 1,000 people that want good shortlet on the mainland, and the island can maybe have 5,000, right? Now the mainland has 1,000. However, when the old boss started, maybe Surulere had 500 supply for the 1,000 demand. So it means that Surulere enjoyed a monopoly.
Yeah.
Now, if Surulere enjoyed the monopoly, when other people started supplying, right, and they now started supplying close to the same level of offering and even better offering, everybody now had a level playing ground. Now it now becomes a game of the best player. So to an extent, what Surulere enjoyed was a first mover, it was a monopoly, right? He enjoyed a monopoly advantage. But I would still like to say that the market is capped. See the same thing that's happening in Lekki. If you supply more than what the market needs, you will suffer. So I think that's what is really happening.
So now let's move to the hard questions, right? Questions surrounding the economy, right? So the first train of thought I have is the era of easy money ending in Shortlet? And the reason why I ask that question is, we've seen the federal government and their policies. We are tightening the monetary policy, and we've seen the inflation, growth rate drop over time, and we are now seeing a new wave that is caused by external economic tensions from the war in the Middle East, which is affecting a common denominator across several industries in Nigeria. So right now, a lot of operators are complaining bitterly. I'm not even talking about Shortlet operators alone, right? This has affected several, parts of the economy, and it is not so easy to do any business that heavily relies on power, especially when you have to provide power yourself with generators that requires fuel, right? Which can also account for a big chunk of your cost of operation. So right now, the question is this hard time going to expose bad operators, or are people being generally relaxed and lazy and not wanting to be innovative?
So there's a term in investment called bubble, toil, and trouble. So it means that before any crisis happens, there will first of all be a bubble, right? And that bubble generally affects or exposes bad operators, like you have said. Because if you look at it, every market that has crashed, the people that knew what they were doing, they were not affected. The people that understood their fundamentals, that understood what was driving the demand, why the market was moving in certain ways, they understood what needed to be done. Exactly. And they understood that this would only last for...
And they could anticipate trouble.
Yes. So I think that's what is generally going to happen in the shortlet market. And it will affect bad operators in two ways. Number one is in terms of the cost of doing business. I think that the operators that would win have to be long-term. They have to understand that it's generally not that very profitable, right? Unless you are playing the long-term game. I would give you an example. In the restaurant space, you see a restaurant do business for about 2 years and packs up, sells the rights of that name to somebody else, and that person does the business 2 years, 3 years. It becomes a circle,
the same circle,
right? So, but you have seen some restaurants, some chains that have played also in the market and maintained their name, and they have been profitable, right? So it means that there's something the good operators know that the bad operators don't know, right? From a cost of doing business point of view, because if you're not profitable, you can't be sustainable, right? I think you were telling me about a particular hotel in VI that had a gas power plant for their hotel,
Yes.
right? If
So
imagine,
they were generating power.
yeah. So
Because at some point, the reason why I
Mhm.
said that was at some point you need to look at the long-term cost of diesel,
Mhm.
right? As towards making an investment
Mhm.
into designing an ecosystem where you have your own electricity generation power plant.
Mhm.
So I think that was the reason why I pointed out to you the other day
Mhm.
when we were talking about because
Alternative power.
and the thing is, I think for us,
Mhm.
right, one thing we also do is we are always thinking about I mean, how can we drive down our costs? What investment do we need to put into our building? How do we design our building in such a way that operational costs is reduced? How can we optimize resources? How can we ensure that we operate this apartment at the lowest cost possible? How can we harmonize things, right? So I don't want to take too much of, I don't want to cut into your points too much, but I just wanted to let you understand the train of thoughts, and I want our audience to understand the train of thoughts we have when we think about all of these things and what's possible.
Yeah, absolutely. So imagine going to that particular location to compete with that kind of hotel, and you don't have that level of patient capital to play on that scale from the cost of doing business point of view. They'll be looking at you and they'll be like, it's only a matter of time because they understand the hard part of the business, which is the cost of operations, right? That's one. So to expose people in terms of cost of operations. Number two, it would expose people that don't understand the drivers of the market, the fundamentals, which usually is what is driving the supply. For every sub-location, there's a reason why a sub-location is performing. There is a reason why the sub-location is being profitable, right? For the Lekki market, there's something that's driving it. For the Ikoyi market, for example, you won't have the same clientele. The top 1% that goes to Ikoyi VI would never come to Yaba.
Yes.
I was speaking to an investor, and the man said, "Me, I should cross Third Milan Bridge for you." Like he made me. I was
Bust
like,
my brain.
Yeah, like so it means that
I also told you one time that I was talking to somebody and the person said, do people do real estate on the mainland? I mean, do people buy properties there? People sell these things on the mainland, and
So-
some people can't just fathom that those economic activities exist on the mainland.
So the same kind of conversation. So I was speaking to someone, and the person said, "I can't remember when last I climbed Lekki Ikoyi link bridge." So it means that some people that their whole life is Ikoyi. You will never find them in Lekki Phase 1. You never find them do anything in Lekki Phase 1.
And some people, the only thing that makes them cross that Tomiland Bridge, if you are being honest, is
the airport. So it means that there is a fundamental for every sub location. So the people that would also do well and surpass this bubble phase are people or operators that understand that for every market there is a cap. For every market there is what is driving the demand. If the market has to grow, or if the market must grow, there must be something that is making the demand grow by a particular margin. So I think in those two ways, from a cost of doing business and from a fundamental analysis point of view, in terms of what is the driver of the demand, I think these are the two niches that would expose bad operators generally.
Okay, so I think in conclusion, right, the person that wins or the operator that wins in the future is the person that can predict the future. And the person that predicts the future is the person that can predict his cost of operations and what his revenue will look like in the future. And if you can control, the things that directly impact your costs, and I think you're on a pedestal for winning in the future, right? So to wrap this, whole conversation up, a lot of things has affected. This is March 2026, and a lot of things are already happening in the real estate industry. We are starting to see regulations, slowly creeping. The ban of shortlet in Banana Island, that's number one. The tax implications for shortlet operators that they are not even aware of, right? A lot of shortlet operators right now, I don't think they charge VAT. I don't know how they absorb all of those costs, but certain nomenclature that are not supposed to be happening in the market, right? So now the real question, and then we also see guests now pushing back, right? People, when you charge for shortlet, people want to compare costs. It was the value I'm getting. Does it actually make sense for me to pay this price, right? And the question now is shortlet actually as attractive as it used to be? Does it make sense generally to continue, investing in shortlet? And if you're going to, do shortlet today, right? What areas would you look like? What areas do you think, have the potential that is needed to, balance supply in the current market that we play in?
So this is a very, very elaborate conversation, and I'd like to take it back to the origin of Airbnb. The full meaning of Airbnb is air, bed, and breakfast, right? However, there's something that made them start Airbnb. So maybe based on the history, in San Francisco, they had tech events. People needed somewhere to stay for the tech event. So it meant that, which is what we are speaking about, which is the driver of the demand. It meant that without those events, there won't be Airbnb. So, to an extent, and there's a term in hospitality called MICE. It's called meetings, incentive, conventions, and exhibitions, right? If you see economies or businesses that thrive, that's why you see a lot of hotels. You won't see any hotel that doesn't have a meeting room, because there has to be something.
Event centers.
Yes, because if the market itself, this general market or the submarket, if it can't give you demand, right, you have to create
something
that brings demand for your own facility.
You book my event center, I have accommodation for you.
Yes, so you have to be able to create ecosystem, right, that gives you the performance that you need and the sustainability you need to get, right? So, okay, before we end this conversation, right, I'd like to ask a question. So, buy, hold, sell across all the submarket in real estate space, or the Lagos Shortlet market space. What locations are you buying? What locations are you selling? And what location are you holding? And why?
So I feel like you just boxed me. Just boxed me there. But I'll try to be very honest. So first off, my buy strategy would be locations that have direct correlation to what brings occupancy into the market. So Ikeja is a solid buy any day, anytime. Proximity to the airport, anything around the airport brings in people, right? So, and that's where the government is, right? So Ikeja, any day, anytime. Lekki Phase 1, any day, anytime. And the reason why I say Lekki Phase 1 is, although Lekki Phase 1 has the second biggest supply in the market, I feel like, what I'll be buying also matters in Lekki Phase 1. So what I'll be buying is investment that takes into account how to get guests, right? For example, I know for a fact that most Shortlet apartments or most Shortlet spaces in Lekki Phase 1 are usually standalone or block of apartments. But, are investors thinking around the position of buying into a place that has a meeting space, or buying into a space that is right beside, right beside a club, or buying into a space that has an intrinsic factor that makes it easy for you to compete with other people, right? So that's what I'll be looking at, right? If I'm trying to buy in a saturated market. If I'm looking at where to hold, so I would say Surulere, right, and VI. And the reason why I say Surulere and VI is,
but so VI doubled in terms of
almost doubled. And I will tell you why my strategy for VI is old, right? Right now, a lot of investments are in the pipeline for VI, a whole lot. And we are about to see a lot of pump into the market. When you drive around there, you see those constructions, right? Is either it's commercial or it is high-rise residential buildings, right? Drive along the corridor of Uzumba and by the way, you can see several 30-story buildings lining up, right? That's about to be a huge supply into that market. So I will hold what I have right now while I try to understand what's in the market. And for Surulere as well, I feel like, Surulere has the hospitality, lifestyle embedded in it. There's not a lot of, there's not a lot happening in the market. And as opposed to what the rational investor would think like, the rational investor would think, there's a bubble, now is the time to buy. No. The best time to buy is after the bubble. After everything has normalized.
That's true, yeah.
Do you understand? So that's why I will be holding, right? That's how I'll be holding these locations. So the locations that I'll be trying to sell in, honestly, I can't think of any right now. But see, anything after. But of course, Lagos is expanding. Lagos has that potential. But Nigeria is not just a space where you can confidently bank on things that are not within your immediate control. Okay. So that's just the problem. But I would say Lekki Phase 2. Lekki Phase 2. What's driving Lekki Phase 2's demand is the nearness to Lekki Phase 1. If I have any bad product that is not performing in the market, instead of holding it, it's best for me to sell it, and I've had those investments into where I think that they will perform. Right? If I have anything in Lekki Phase 2, right, that is not performing well or that is not optimized for Shortlet. If I have a 5-bedroom duplex that gives me 5 bookings in a month, please, I'll sell. right? Because those buildings, right, are not designed for optimization, right? And for example, I'll give you a perspective. If I have a 5-bedroom duplex, right, somewhere in Lekki Phase 2, and I charge 500k per night, which is off the chart, right? How many bookings do I need to make per night, per month, in terms of occupancy to break even with that particular property, right? Looking at the costs of operations, right? We've taken Shortlet before. We understand how it can be, right? Power generation costs, all of the staff that is needed to ensure that, I have a chain of Shortlet. The only place it makes sense for you to own a condo or a duplex for a Shortlet is if you own 4 on the same street. So that way you can, manage across board, or you own several in the same estate. Well, if you have one in this estate in Lekki Phase 2, you have another one in Osakpa, you have another one in this place, right? It makes it increasingly hard. And when there's a sharp rise in the cost of operations, you are impacted in the ways that you can't even imagine. And the worst place to be is a place where, a position where you have to bring in money to fund operations of a Shortlet that you're not making money from, right? And that's why we've seen a lot of people also shut down their Shortlets over time. And of course, demand is shifting, right? The people that want to book the 5-bedroom duplex are most likely people that want to throw parties. These guys will damage your stuff. So the cost of operating that business, I've seen people firsthand, complain bitterly, and they've had to shut down their property. So I would sell maybe not, the location might not be the problem, but I will sell apartments like that to focus on, buying properties that are in a well managed ecosystem. So that is what I will sell, right? So I think that's about it, right? So I think it's been a beautiful run so far, and what I want you guys to expect, if you are watching us right now, or if you are looking at investing in the real estate market, across several industries, is to keep tab on the Market Intelligence Podcast. Yeah, what we'll bring is unbiased opinions about what the market is saying, what the numbers look like, and what the industry is pointing towards. Thank you for joining us on this episode of the Edala Market Intelligence Podcast. Cheers and speak soon.